Here is some breaking news straight from your UK Money Guide today. We're bringing you an urgent and crucial update on your finances. The Bank of England has just made a major decision that will impact millions of us across the country. The big news: at its meeting today, August 7, 2025, the Bank of England's Monetary Policy Committee, or MPC, has announced a significant cut to the official UK interest rate. This is the fifth cut in the last 12 months, and it's a huge story. The base rate has been reduced by 0.25 percentage points, bringing it down to 4.0%. This is the first time the base rate has been at this level since early 2023. Why the cut happened? So, why did they do it? The decision comes as the UK economy shows signs of slowing down. Reports indicate a weakening labour market, with rising unemployment and slower wage growth. The economy has also contracted in recent months. The Bank of England is hoping that by cutting interest rates, they will stimulate spending and investment, helping to prevent a deeper economic slowdown. Impact on mortgages. Let's get straight to what this means for your money, starting with mortgages. This is where the biggest impact will be felt for homeowners. If you have a tracker mortgage, this is excellent news. Your interest rate is directly linked to the Bank of England's base rate. This means your monthly repayments will decrease, likely starting with your next payment. You should receive a letter or notification from your lender soon confirming the new rate and your reduced payment amount. If you are on a standard variable rate, or SVR, it's also very likely that your lender will pass on this rate cut. You should see a reduction in your monthly payments, but remember that SVRs are often much higher than fixed-rate deals. This is a good time to consider your options. What about if you're on a fixed-rate mortgage? Unfortunately, this rate cut won't immediately change your current payments. Your rate is locked in for a set period. However, this news is very positive for anyone whose fixed-rate deal is coming to an end. Lenders have been cutting their fixed-rate mortgage deals in anticipation of this announcement. You can expect to find more competitive deals than a few months ago when you start to look for a new fixed rate. Impact on savings. Now for the savers. A rate cut is not such good news for you. Banks and building societies are likely to follow the Bank of England's lead and reduce the interest they pay on savings accounts. If your money is in a variable rate savings account, you should expect to see your interest rate drop in the coming weeks. The rate of return on your money will likely decrease. What can you do about this? This is a crucial time to review your savings accounts. Consider looking at fixed-rate savings accounts or cash ISAs, which lock in an interest rate for a set period. Acting now, while rates are still relatively strong, can help you secure a better return on your money before more cuts are potentially announced later this year. The bigger picture: what does this mean for the UK economy as a whole? The Bank of England's decision reflects a delicate balancing act. They are trying to support economic growth without triggering a rise in inflation again. This cut is a signal that they are more concerned with a potential recession than with prices spiraling out of control. It's a sign of caution, and a move to protect jobs and businesses. What to do now? Action plan. So, what should you do with this information? 1. Check your mortgage. If you're on a tracker or SVR, be on the lookout for a letter or email from your lender confirming your new, lower payment. If your fixed rate is ending in the next 6 months, start shopping around for new deals now. 2. Review your savings. Take a close look at the interest rate on your savings account. If it's a variable rate, consider locking in a better return with a fixed-rate product while you still can. 3. Stay informed. The Bank of England has hinted that more rate cuts could be on the way if the economy continues to slow. Subscribe to your UK Money Guide to stay up to date on all the latest financial news that impacts you. Conclusion: the Bank of England's interest rate cut is a major event. For many homeowners, it brings welcome relief, but for savers, it means you need to be proactive to protect your money. Thank you for watching. Don't forget to like this video, subscribe to your UK Money Guide, and hit that notification bell so you never miss an update. See you next time.